Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES tested 2105 quarter near the top of the current balance area where responsive sellers were active, and at this point, ES is simply balancing within the overnight range. Heading into the open, holding above 95 quarter to 97 quarter would confirm the buy side in control, and from there we can actually retest 2105 to 2107 and potentially go up and test the 2110 quarter all-time high. The only concern is that there's not really any economic catalyst that can really drive the market big, but you don't always need a economic catalyst to move the market, so this is just something we're gonna have to see once the market opens, and we'll be gauging whether there's enough momentum, enough volume, and enough broad market strength to support a upside breakout. The 95 quarter, 97 quarter is a bit middle of range here. So to initiate any longs off of 95 quarter, 97 quarter, we do need to see some fairly strong internals and the other markets also holding up relatively well. Otherwise, this is the middle of range, and even though it is short-term support, it's a nice reference area where if the market's holding above it, we know that the buy side's in control, but continued tests of 95 quarter and 97 quarter could lead to a break and a move down to the gap fill at 91 and a test of 88 to 90, which is really the main inflection point. So as long as 88 to 90 is holding, there's still a chance that the market can simply bounce in a range and the buyers can still maintain control. But in the short term, a break below 95 quarter and 97 quarter would be short-term bearish into 2091 and 88 to 90, and then that's a spot where buyers can still defend. Now, on the downside, if you break 88 to 90, that would signal failed breakouts from the overnight session and from yesterday morning, and at that point, the control can shift from the buy side to the sell side, and we could get a move down to 81 quarter to 83 quarter, and potentially even 73 half to 75 half. Again, there isn't any major economic catalyst on deck today, so just keep that idea in mind. But we are going to have to see some relatively high volume in order for any really wide range moves to take place. And if the volume starts dying off and the internals are relatively mediocre, then we might continue to bounce in a range before we get any type of sustained directional break one way or the other. But we are simply trading within a wide balance, essentially 65 up to 2105 for the most part. And we're seeing that buyers were active at the bottom of balance, sellers were active at the top of the balance in the overnight session, and overall the market is bullish. Even short term, the market is bullish, so it does call for caution on the short side. And eventually, it seems like the market is still setting up for an upside move, but instead of predicting that move, it's better to be prepared for it. But then once the market opens, look for those signs. See if there's enough strength in the market to really continue going higher. And at the same time, don't take aggressive shorts unless there are very clear-cut signs that either there's a disconnect between the internals and where price is trading, or if there's just very clear weakness coming into the market with sustained negative momentum and whatnot. But if there's no clear-cut sign, then by default, the buy side is in control here, and for that reason, it's better to be aggressive on the long side if you're going to be aggressive, and conservative on the short side until we actually start seeing some breaks of some support areas here. So again, holding above 95 quarter and 97 quarter would leave the buyers in firm control. On the upside, 2105, 2107, but keep in mind the area has been tested multiple times, and continued tests of 2105 to 2107 can lead to a breakout and a test of 2110 quarter, which is the all-time high, and above that we have no hard resistance. So right now the bias is bullish heading into the day, but cautiously bullish, where we're going to have to see how much strength there is in the market, how much volume there is once the market opens up, and then based on that we'll determine whether it makes sense to be aggressive on the long side or simply conservative and wait for some sort of pullback or some sort of intraday market structure to build up some more confluence and allow us to get on board. If that doesn't happen, and that means you have to miss a trade, that's okay. If you're not getting good risk reward, if you're not getting a good contextual idea, then it is better to skip it. So those are really the main thoughts heading into the day. Let's see if the buy side can hold it above 95 quarter or 97 quarter. That would leave them in firm control. 88 to 90 is really the key zone at this point for some larger time frame control. So let's see if the buy side can hold it up today, and we'll take it from there.